Hey guys, what's up? Welcome to another episode with me, Shashank Udupa. And in today's episode, it's going to be a very fun episode. We're going to talk about 5 stocks that can give really good returns in the future. Mainly because if you want to invest in stocks, basically you can even turn a small investment of 1000 rupees that you do every week as an SIP into lakhs after a few years, right? Now this video is also going to be very special because at the end of the video, there is a gift of free Tesla shares of 500 rupees. So don't miss this opportunity. We're going to see this episode. Let's do a deep dive into 5 stocks. Okay, stay tuned. Now the 5 stocks that I'm going to talk to you about today are really good stocks fundamentally. Also, if you look at those stocks in the future, they seem like they have a very bright future because the sector is also winning and the stocks are also looking really good, right? Now why am I saying you can invest 1000 rupees every week? Because ideally it is very good to do an SIP because now the market is suddenly turned bullish and it's turned positive again. So for all the people who are salaried income, who get monthly salary, it is very good for you guys to do an SIP instead of a lump sum, right? And SIP is good because usually it's affordable. You can start with a low amount of 500 to 1000 rupees. It's also budget friendly because you can start investing in very good stocks through an SIP format as well. So in today's episode, we're going to talk about all of this and let's quickly go into the first stock, which is Ihcl. Okay, let me quickly go into it. Now, stock number 1 is called Indian Hotels Co. Company Limited, right? Now, if you look at the stock chart in the last 5 years, this stock has been giving very good returns over a period of long time, right? If you look at some of the key stats of this particular stock, this stock is currently at a market cap of 38,000 crores right now. Now, why am I showing you this stock is because I know you might have heard of Ihcl. Ihcl is basically now turning its model into an asset light model. Now, obviously their Taj brand is very famous, but now they're slowly turning into an asset light model, right? Now, let me show you this as well. Now, what they're doing is over a period of time, the operator of Taj Hotel or Taj Resorts, they're doing an asset light model where they want 50% of their properties to be asset light and they want 50% of the other property to be owned or leased, right? And with whatever revenues that they're saving right now, they're selling some of their hotels, and whatever revenue that they save, they want to put it back into their borrowing so that they can reduce their debt, reduce their interest, and the profitability of the company will go up. And knowing that it is a Tata stock, it can give very good returns over a long period of time. Now, if you look at it from a stock price perspective, over a long period of time, it has been doing really well. And even if you look at the performance of last 1 year, it's given approximately 93% returns in the last 1 year, right? If you look at the net profit, it is really bad because it has been going up, but because of COVID, it has gone down quite significantly. Even the revenue, if you see post-COVID, it has gone down a lot, but before COVID, it has been doing really well, right? And if you look at the revenues, it is a seasonal business. And now, knowing all of us going back into vacationing mode and going into different places, I personally stay in Taj as well. So I'm taking a small bet on this company for a long period of time. You can either do an SIP, like you can either just start an SIP into this company, or you can directly invest in this company as well. Both is possible for you, and it is a cash flow positive company. So nothing wrong with that, right? Now, if you look at the company from a long perspective, right? If you say that I'm going to invest for a very long period of time, then you have to keep this stock at least for 3 to 5 years for you to see some good kind of returns. Why? Because it's going to take them at least 3 to 4 years for them to start reducing their debt and their interest component to go out so that you can start getting more revenues in your profitability, right? So this is what I would say from Ihcl perspective. Now, coming to the next stock. The next stock that we're going to talk about is a very interesting stock that I found recently in my community program, and that stock is called Intuit, right? Now, what does Intuit do, right? Let me go down and just show you what it does. Basically, it is an IT company. Intuit is an IT company that provides financial management and compliance tools and services to individuals, small companies, and even self-employed in US, Canada, and abroad. Basically, it's a SaaS-based company, right? Now, if you look at this chart, just look at this, right? This very similar to a consistent compounder chart, right? Now, this is a US based stock. This is not an Indian stock. And this is there for a very long period of time, right? If you hold it for like 5 years, it has given consistent compounding returns. And the advantage is you can buy this in a fractional format. What is fractional format? Basically, you can buy shares in a fractional format. So you don't have to pay $489 for this. You can buy even $10 or $5, $10 of this stock as well, right? Now, if you look at the 5-year return of this stock, it has been giving 241% return with a market cap of $133 billion, and it has been doing significantly well over a long period of time, right? Let us quickly look at their performance. So yeah, if you look at the analyst rating as well, with respect to 28 different analysts, they've been giving a buy rating over here, and this is what I like, right? Income growing year on year, right? Revenue growing year on year, and balance sheet looking healthier than ever, right? So I'm going to take a small bet on this as well for a long period of time. It also gives you a 2.54% dividend yield and a good EPS of 7.78. So Intuit is something that you can keep in your radar. There are some advantages of investing in US stocks as well, right? Basically, you have rupee depreciation benefit. So basically, if you look at the dollar and rupee, you invest in dollars, and if the dollar actually goes up, then you benefit from that perspective as well, right? Now, earlier it was very difficult to invest in US stocks, but now it has been made very simple with the IND Money app. Another advantage is it's all free. Like there's no commission on buying stocks, there's no commission on selling stocks, there's no paperwork to open an account, there's no account opening or maintenance charges, no flat fees to basically load your US stock account, and they also have the lowest withdrawal charges in the business as well. So if you want to invest in this stock, you can do it easily through IND Money also, right? So you can start basically a weekly or a monthly SIP in your favorite stock, which is a good stock like Intuit, with as low as 500 rupees. Now don't forget, if you want to load your wallet, there is a link in the description below. If you sign up on that IND Money link, which is a gift link, right? So in that description, I'm going to put that link. You can create and fund your US account. You will get free Tesla stocks worth 500 rupees. So click on that link in the description and get your free gift, right? Now stock number 3 is called Varun Beverages. Now Varun Beverages, you've heard me talking about it if you have been following me for a long time. This is a very good consistent compounder that has been working really well. What does Varun Beverage do? Let me quickly show you. So Varun Beverage is a part of RJ Corp, which is a diversified conglomerate, which is basically in the beverages space, and it is one of the biggest franchisees of PepsiCo in India right now, and it has been doing really well from a very long period of time, right? So if you look at the 1 year return, it's giving approximately 99% return in the last 1 year it has given, and it is consistently going up. I have personally invested in this as well, disclaimer on that. My holdings is currently 45% up right now. It has a market cap of 65,000 crore, and it is consistently growing in revenue as well. So if you look at the annual revenue, it has been growing. Now they're also planning to enter in the food space. Earlier they were only in the carbonated beverages space. Now PepsiCo and them are striking a deal where they can now start entering the food space as well, right? Again, if you look at revenue, very good balance sheet, very good cash flow, positive cash flow. So these are some things that are very good. If you look at the PE is currently at 54, slightly higher, but also because this is a high growth stock. But if they give one bad quarter, everything might change. Okay, so but they are doing really well right now. EPS is at 18.92. The book dividend yield is also at 0.27. So this is a very high growth stock that you can invest in. I have done multiple videos on this in the FMCG space. So Varun Beverage is stock number 3 that you can invest, right? Now, stock number 4 and 5 are also very interesting stocks. Now stock number 4 over here is called Berkshire Hathaway shares B. Now there's class A shares and there's class B shares. Class A shares are too expensive. It's at $400,000. Class B shares are approximately at $300. There is not much difference between the two. You can buy class B shares with fractional amount as well. So you can even buy at $5, $10, $15, $20. You can do whatever you want, and you can buy this here as well, right? Again, if you look at it from a 5-year return perspective, very good return, 70% return. It is the same company that Warren Buffett actually invests in. So Berkshire Hathaway basically invests in multiple different companies, and you become a part of that company basically, right? So they have 2 shares that are listed, Berkshire Hathaway A and Berkshire Hathaway B. So you can check out Berkshire Hathaway B because you can start investing in fractional shares in this. Is there any difference or there's massive difference? No, there is not a big massive difference. But if you have any questions, you can go through all of these questions below as well, right? Now, coming to the final stock. Now this is a very exciting stock. You should definitely see it. I've not spoken about this, but again, in my community session, we found this as well, right? And this is called Abbott Industries. Now Abbott Labs is also there in India. Okay, it's not like it's not there in India, but the US counterpart in the last 5 years has given beautiful returns. It was at $49, now it is at 119, went up to a peak of 140 again, right? So if you look at the last 5-year return, it's approximately 113% with a market cap of 195 billion, and they're in the pharmaceutical space, pharmaceuticals and drug manufacturing. So they're into that particular period right now, right? So again, if you look at Abbott, maybe the Indian company is not doing really well. So let me just show you. Yeah. So if you look at Abbott India, they have an Indian counterpart as well. And if you look at the Indian counterpart, they have also been a consistent compounder, again at 43,000 crore market cap, but their 1-year return is not significantly good, but their 4-5-year return is significantly better, right? But if you look at the US counterpart, you can invest in the US counterpart as well, which is giving very good returns. Let's quickly look at some of the things. Analyst recommendation is a buy right now. The prediction forecast is good over here. The revenue is increasing, income is increasing, balance sheet is also very healthy. They have a dividend per share of approximately 1.82% is the dividend yield. Market cap is $200 billion, and the Wall Street target is currently $141, and this is currently trading at 111. So that means this is a buy rating, and it can go up approximately to 141, which is the all-time high that this company had done, right? So again, this is very interesting to invest in Abbott. Abbott is doing really well, but again, as I said, if you're planning to invest in these stocks, you have to wait for at least 4 to 5 years. You cannot invest right now and say ab bhi mere ko paisa chahiye. वो time लगेगा, आराम से करो, you will get the money, right? And you can also invest this in a fractional format. You don't have to put $111 right now, even though it is cheap to buy it. You can invest in even $10 or $50 that you want, and you can start buying this as well, right? So these are some of the important stocks that I wanted to talk about. So guys, we saw 5 stocks that are fundamentally very strong. These were 2 Indian stocks with great future prospects, 3 US stocks with also great future prospects, and these stocks are very good for investing in an SIP format, as I mentioned at the start of the video. If you're planning to do SIP, this is very good because one, you're diversifying in India and you're diversifying in USA, so you get the rupee depreciation benefit over here as well, and you invest in India, so you have a mix of both worlds, right? So that is why this video was very important to showcase for you guys. Also guys, let's thank IND Money for being beautiful partners on this video. They're a beautiful app which has more than 5 million Indians who actually use this app as well, and you can not just do monthly investments or weekly investments, but you can also think of doing daily investments, and that's possible in IND Money's new feature called Mini Save. So with this, you can basically save and invest your spare change into US stocks automatically without any effort required, right? So IND Money will basically track all your expenses and automatically save from all your spending. So when you reach a savings of say 1000 rupees, they will automatically get invested into US stocks, and there are some beautiful stocks that we spoke about as well. And again, don't forget, there's a link in the description. You can click on that link, fund your US account, and get your gift of free Tesla shares worth 500 rupees. And if you like this video, please click on the like button, share this with your friends, and subscribe. This is me, Shashank Udupa, signing off. And wait, I want to know more video recommendations from you guys. If you feel you like this video, we can do more mix and match of different stocks as well. So put it in the comment section below and I will cater to them as well. This is me, Shashank Udupa, signing off. Take care. See you guys. Bye.